Let's go now to Marcus Padley, former stockbroker, now quite a famous analyst and got his own newsletter, Marcus Today, and he's on the line right now to try and help us analyse what Medibank Private will be all about. Marcus, many thanks for your time.
Yes, evening, Ross. I am still a stockbroker, by the way.
And still a stockbroker. You should always put that out there as well. That's a good thing.
That's all right.
Listen, just one small aspect about this, and that is that just looking forward at some of the forecasts that they have got for not only their revenues and their earnings and all that type of thing, do you think really there's enough growth in here to justify the higher end of the price band that the government's put on this?
Ross, I think when 750,000 people pre-register, if you consider there are 23 million people in the country, that's an enormous number of people showing interest, which shows it's gone beyond people just interested in equities, which have become a bit of a backwater asset class anyway recently. It's gone to everybody, and they're all interested. And I think on that basis, you're likely to see a toppish end of the range number. But I think with the numbers on Medibank or any government float, the idea is that the government tends to favour the new shareholders over the old shareholders, which are the taxpayers. That's been the sort of history of government floats. They want a good after-float experience for all the voters who buy the shares, and the taxpayers they won't really worry about because it's so dilute. People don't really realise that they're not selling for the highest price. So really, everybody wants a good experience. I think they're going to deliver it. Even if the demand, which looks strong enough to get it up to the top end of the range, and the institutions may even bid above $2, in which case retail investors will get it at $2, they'll get a bit of a discount. Even if it does go up the top end of the range, I think they'll pull it back below the top of the range just to make sure everybody has a good post-float experience.
I just made the observation today, going into a federal election in 2 years' time, the government would not be wise to have 500,000 angry Medibank private shareholders who are underwater on their positions, would they?
Absolutely not. And the one thing that will stuff that little equation up for them is not the pricing, is not what Medibank Private is, it'll be the market. Because if the market, which has proved very volatile just recently, I just think it's a short-term correction we're in, but if we do end up in this new bear market, it all becomes apparent over the float process. You know, they could be setting the price too high, and then by the time it comes on, the market's killed the thing. So that's your biggest risk as an investor in the very short term. But in the longer term, Ross, this is the NIB Holdings, which listed in 2007, has rolled out the red carpet for Medibank Private because it's been a great investment. Eventually, it's sort of listed around $1. It's gone to over $3. Currently, you've tripled your money on NIB in 7 years. And if people can see that similar sort of experience with Medibank Private, they'll see it as a long-term investment, not a short-term investment. And the other thing with the government float as well is they've got sales growth in the forecast here of 4.5%. That compares to NIB Holdings 10%. That's sort of exactly what you would hope to see from a government float, which is pretty inefficient, lots of cost cutting to be done. They can get their revenues up as well to a similar sort of level as NIB. Admittedly, NIB have got a 7% market share. They've got about 30%. But if they can get it to that sort of growth rate, plus it's got a decent yield. If it was bottom end of the range pricing, the yield would be 7.4%, including franking. Even at the top of the range, it's still a 6% yield, including franking. Tracking 10% growth. Plus, it's quite a safe business. It's not a volatile car sales thing or real estate.com thing that something could go wrong with the whole business plan in a stroke. This is a very steady business, so people will see it as the perfect combination in the equity market at the moment, safe income.
I'll tell you what, there's one other point that of course, becomes a part of this. You talked about the dividends there and the sort of level of dividends at the bottom end of some 7% dividend yield, which would be attractive. Even at the higher end, it's still relatively attractive. But this business will throw off enormous amounts of cash. That's one thing, because you know there are almost guaranteed stepped-up increases in premiums each year, notwithstanding the competition that's around the place. And so as a result, it's a very strong, secure, rising cash flow, isn't it?
It is, but I would just point out, as I think the Intelligent Investor wrote about it today or yesterday, in 2012, about a third of their net profit came from investments. They have a bit like an insurance company, have a huge amount of money sitting around that so they have to invest. waiting for to pay out to policy holders. And although they can't count the money as their money, it's actually counted as a liability, the earnings off that money is quite significant, and they can count that into profit. That was a third of profit a couple of years ago. If the stock market and other markets fell through the floor, they could turn a third of their profit into a loss. So it's not, at the top line, it's not actually that safe and secure. But I think even if the equity markets fell over and their investment portfolio fell over a little bit, I think people would still see through the long term to the more regular income from the business rather than from investments, and continue to invest in that. And I think any weakness on the back of the market fall would be quickly seen as a buying opportunity by the larger institutions.
I'll tell you, Marcus Padley, great to talk to you about this. MarcusToday.com.au is his newsletter area, stockbroker, also a writer for a range of different publications. But on top of that, also somebody who is very good at trying to crack these things. Will you buy a few, Marcus, just in brief to finish off?
Ross, I got so blinking busy, I missed the thing. Can you believe it? But having said that, I would buy them from a grandmother. I'm a bit more short-term and high risk. I definitely buy them as a long-term investment, even if they're top of the range. I think it's not really about whether you make money in the float. It's really about the longer term. And if I hold NIB shares, I've been very happy with them. I'm sure I'd be very happy with Medibank in the long term as well.
There you go, Marcus Padley. Appreciate your time on the program.
My pleasure, Ross.